Welcome to a new IFRS Education Fund series. It's an initiative of OJ Education Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards IFRS through a multiple choice question and answer approach. It is intended to make learning verification, mastery, and intellectual assurance fun. In this session, we shall be considering cumulative set 10 questions to which the answers have been provided on IFRS 2. This is the standard on share-based payment. Viewers or subscribers have 30 seconds to select or choose their answer to each question. The answers to the cumulative 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 11. The definition of fair value in IFRS 2 is as stated in A. IFRS 1, B. IFRS 2, C. IFRS 3, D. IFRS 5, E. IFRS 7. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 12. Which of the following components of expression is contained or implied in the definition of fair value in IFRS 2, but not IFRS 7? A. Asset. B. Liability. C. Exchanged. D. Equity instrument granted. E. Price. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 13. A contract that evidences a residual interest in the assets of an entity after deducting all liabilities is called A. Treatable instrument, B. Option, C. Equity instrument, D. Founder's share, E. Preferred share. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 14. The date at which the fair value of the equity instruments granted are measured for the purpose of IFRS 2 is called A. Measurement date, B. Market date, C. Transaction date, D. Agreement date, E. Strike date. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 15. For transactions with employees and others providing similar services, the measurement date is A. Not the grant date, B. Always the grant date, C. Sometime the grant date, D. The market date, E. The trade date. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 16. In IFRS 2, the period during which all the specified conditions of a share-based payment arrangement are to be satisfied is called A. Vesting cycle, B. Vesting span, C. Vesting conditioning, D. Vesting life, E. Vesting period. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 17. For transaction with parties other than employees, the measurement date is A. Always the grant date, B. Sometimes the grant date, C. The date the entity obtained the related goods, D. Not applicable, E. The trade date. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 18. Which of these is correct? A. Service condition and performance condition are not components of vesting condition. B. Service condition is part of performance condition. C. Performance condition is a subset of service condition. D. Performance condition and service condition are the same. E. As vesting condition, only service condition exists. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 19. A counterparty's right to receive cash, other assets, or equity instruments of the entity vests when the counterparty's entitlement is A. Not granted, B. Conditional, C. To be discussed, D. Scrapped, E. No longer conditional. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 20. A share-based payment transaction cannot be settled by A. The reporting entity that acquires goods under the arrangement. B. Another group entity on behalf of the reporting entity. C. A shareholder of the group entity that the reporting entity belongs. D. The counterparty that provides services under the arrangement. E. The reporting entity when another entity in the same group receives the goods. Some counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to reveal the answers. Question number 11. The answer to question number 11 is B. IFRS 2. B. IFRS 2. The term fair value is used in IFRS 2 in certain aspects that is different from that of IFRS 7, titled fair value measurement. For the purposes of applying IFRS 2, the definition of fair value as stated in IFRS 2 is used, not that of IFRS 7. B is the answer to question number 11. Question number 12. The answer to question number 12 is B, equity instrument granted. B, equity instrument granted. IFRS 2 defines fair value as the amount for which an asset could be exchanged, a liability settled, or an equity instrument granted could be exchanged between knowledgeable willing parties in an arm's length transaction. IFRS 7 defines fair value as the price that will be received to sell an asset or pay to transfer a liability in an orderly transaction between market participants at a measurement date. All the components of the definition of fair value under IFRS 2 are either contained or implied in that of IFRS 7, titled Fair Value Measurement, except for the term equity instrument granted. D is the answer to question number 12. Question number 13. The answer to question number 13 is C, equity instrument. C, equity instrument. Equity instrument is a contract that evidences residual interest in the assets of an entity after deducting all of its liabilities. This is a unit of the share portion of the total equity of an entity. C is the answer to question number 13. Question number 14. The answer to question number 14 is A, measurement date. A, measurement date. Measurement date is the date at which the fair value of the equity instruments granted is measured for the purpose of share-based payment arrangement. A is the answer to question number 14. Question number 15. The answer to question number 15 is B, always the grant date. B, always the grant date. For share-based payment arrangement with employees and others providing similar services, the measurement date is the grant date. B is the answer to question number 15. Question number 16. The answer to question number 16 is E, vesting period. E, vesting period. Vesting period is the period during which all the specified vesting conditions of a share-based payment arrangement are to be satisfied. E is the answer to question number 16. Question number 17. The answer to question number 17 is C, the date the entity obtained the related goods. C, the date the entity obtained the related goods. For transactions with parties other than employees and those providing similar services, the measurement date is the date the entity obtains the goods or the counterparty renders the service. C is the answer to question number 17. Question number 18. The answer to question number 18 is B, service condition is part of performance condition. B, service condition is part of performance condition. Performance condition is a vesting condition that requires 1, the counterparty to complete a specified period of service, which is the service condition, and 2, specified performance target to be met while the counterparty is fulfilling the service condition. B is the answer to question number 18. Question number 19. The answer to question number 19 is E, no longer conditional. E, no longer conditional. Under a share-based payment, a counterparty's right to receive cash, other assets, or equity instruments of the entity vests when the counterparty's entitlement is no longer conditional on the satisfaction of any vesting conditions. E is the answer to question number 19. Question number 20. The answer to question number 20 is D, the counterparty that provides services under the arrangement. D, the counterparty that provides services under the arrangement. Settlement for share-based payment transaction can be made by 1, the reporting entity that acquires goods under the contract. 2, another group entity on behalf of the reporting entity. 3, a shareholder of the group entity that reporting entity belongs. And 4, reporting entity when another entity in the same group receives the goods. Share-based payment transaction is not settled by the counterparty that provides services under the arrangement. The counterparty is the beneficiary. D is the answer to question number 20. That is all for this set 2. Thank you for joining us for this set 2 of IFRS 2 share-based payment. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the service are reserved for OJ Inspection Limited. Thank you once again and bye for now.